Hey guys, so earlier today I was on the phone with a good friend of mine for over 30 years and we were talking about real estate. And he was asking me about what I thought the current market and what I forecasted for the future of the real estate market. I then asked him, well, what do you want to hear? You want to hear the good or do you want to hear the bad? He said, you know what? I want to hear the truth. I then, like Jack Nicholson said, in A Few Good Men, you can't handle the truth, but I always give it to him straight. So here we go, guys. Here's the truth from what I see it as a 20-year real estate agent, real estate investor, and as a general contractor who's been in the business for years. Hit the subscribe button, please. So as we approach the spring market, the housing market is showing signs of decline. But this must just be the tip of the iceberg for a potential housing meltdown. The real estate industry was hit hard by the pandemic, which caused a major shift in the market. So now from March of 2020 to June 2022, the median price of homes increased by 43%, which was unprecedented, all right? This led to a record high equity for owners and millions in profits for investors. Now, however, after 27 straight months of growth, the market finally took a breather in June of 2022. So since then, the Shiller index has declined for 5 straight months, falling 3.6% from the peak. Now, this may not seem significant, but historical data shows that such a decline rarely happens. In fact, since 1986, the market has almost never dropped more than 3%, except for one in 2008 and a small 3.05% drop in 1990. Now, this suggests that we may be in a denial phase of the housing crash. So private sellers may be maintaining the illusion of a stable market, but the builders who move thousands of units per month have whole teams dedicated to setting prices. They have a better understanding of the supply and demand issue. They have a higher incentive to move prices down in order to move their inventory. And we've seen that almost every serious builder has moved their prices down, and they've even started including incentives like rate buy downs to encourage buyers. All right. So the incentive earnings report from builders reveals some serious issues within the market. Now, while it can take some time for the effects of these actions to move the existing home market, it's undeniable that these developments in the new home space will have an effect. New homes are always the ones that anchor prices, and a new home slowdown will likely influence the prices of existing homes. Now, real estate crashes are slow processes that start with builders and flow down throughout the entire market, all right? So during the last housing crash, prices peaked in July of 2006, and it took a full year for the Shiller index to fall only 1.95%. It would take the Shiller 5 years and 7 months to complete its collapse, bottoming out in February of 2012 after a 27.4% drop. It would take another 5 years to return prices to the 2006 peak, making the entire cycle last 10 years and 6 months. So the housing market is at a crossroads, and the American dream of owning a home is under threat by simple math. The reality is that home values don't drop overnight, and the process is slow and filled with frustration, regret, and greed. However, the market will eventually flush out all the greed, and at the end of the day, the market will be at a new equilibrium. The current situation in the housing market is a stark reminder of the importance of managing risk. Those who have overextended themselves in the market or taken too much debt may find themselves in a difficult situation. However, those who have been conservative and have a long-term view of the market will likely weather the storm. So in the end, the housing market will always be subject to market forces, and those who are able to navigate these forces will be the ones who come out on top. While it's easy to get caught up in the frenzy of a booming market, it's very easy to do that. It's important to remember that what goes up must come down at least a little. The key is to be prepared and to manage risk. So that is when the market does inevitably correct. You'll be able